Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD for Monday. If you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, this is the hourly chart of gold in front of us, and gold is in pressure right now. Okay, so is this a trend reversal? No, this is not a complete trend reversal, because if we look at the market sentiment, for example, gold trades down, still unable to challenge October record. Gold falls more than 1% as traders await Fed decision. So whatever we have going on the chart of gold right now, this is just a technical correction, not a trend reversal because of any fundamental. Because right now market is mostly waiting for the FOMC. After FOMC, if market starts falling, then we can expect that a fall on gold will continue for the next couple of days and weeks. But right now, whatever we have going on the chart of gold is just a technical correction, because without any fundamental reason, there cannot be a trend reversal as well as trend continuation. Okay, so my dear friend, okay, if you are a positional trader, then obviously you should be looking for buy positions only. See, positional trader means, okay, whenever you take a position, okay, your positions last for a couple of months. Okay, so you should be focusing on the overall chart of gold. As a result, okay, it will be best for you to look for buy around 255,040 or 2600. These are the two levels on the chart of gold where you can look for buy. As a positional traders means, after taking a buy, you will sit on the same position for a couple of months. But if you're a swing trader, means your positions will last for a couple of days to max 7 to 8 days, then yes, you can continue with your sell position. Okay, and if you're a day trader, you don't like to hold your positions overnight, then you should be focusing on the levels only. One chart, you can see three different trading styles. Okay, so this is the most confusing and the amazing part of trading. Okay, now let's look at the higher time frame. Okay, let's look at the weekly chart once, and on the weekly, we can see that market has shown good amount of price rejection from above, means selling pressure is there, and I'm not expecting market to fill this gap here after FOMC. Anything is possible, but right now, okay, on Friday or Tuesday, I don't think so. Market will be going down this big. Okay, yes, there can be some uh, selling pressure on the chart of gold. Okay, but not a big trend reversal. Okay, and if you look at a daily chart of gold, my dear friends, daily chart is still very much bullish. Okay, so this is the reason I told that if you're a position trader, you should be looking for buy positions only. But yes, there is a possibility of further correction or retracement. Okay, means for position traders, buy at dip. Buy at dip is the forever trading strategy. Okay, and the swing traders, you can take both the sides. But if you're a day trader, okay, level to level trading or stick to the levels, that is the best trading strategy. Okay. Now let's look at the hourly chart again, because most of us are day traders. Before I proceed, I would like to discuss about DXY. As we all know, the correlation between DXY and gold is not going well for the last couple of months. There was a time when we used to see candle by candle correlation. Okay, that correlation doesn't exist, but the overall effect or impact, yes, it still exists. So we can see that there has been considerable recovery on the chart of DXY. Okay, so if the upside on DXY continues, then yes, we will see some pressure on the chart of gold. But most importantly, we need to focus on the US government bond yields chart. Okay, and we can see that this chart is extremely bullish, and there's an inverse relation with gold. Means whenever US government bond yields goes up, we see pressure on the chart of gold, and vice versa. So the bond yields is extremely bullish right now. If the bullishness on US government bond yields continue, then we will see pressure on the chart of gold. Why? Because see, bonds are considered to be the safest form of investment. But the problem with bonds is that, okay, the rate of interest is very low. So whenever the rate of interest or bonds goes up, it is believed that, oh my God, bonds is going up. Okay, so what investors do is that they pull out their money from gold and invest on bonds. And when the price of bonds goes down, people believe that, oh my god, the rate of interest is so low and it is going down further. Okay, let's pull out the money, and they invest on gold. So this is the reason why we always see a opposite correlation between government bond yields and the gold. So if the upside on bond is continue, we will see pressure on gold. But on Monday, I think there will be some correction. Not a trend reversal, but there should be some correction on the chart of bond yields. Okay. And my dear friends, the world's most affordable Forex trading workshop is back again. Less than a week left for the workshop. It's a 7 days workshop followed by 1 month support, specially designed for those people who are struggling with the market, unable to make money with the market right now. If your losses are big, profits are small, okay, consistently you are losing money, then yes, this workshop can be very useful for you. There will be 3 consecutive classes. These are the dates here, and there will be 4 weekly sessions. You can see the dates mentioned here, and these are the topics that we will be discussing during the first 3 days, and we will be discussing these topics in the weekly session. So overall 7 sessions or 7 classes, and you'll also receive risk management guide, checklist, lot size calculator. We will focus on discipline and risk management part, how to calculate a lot sizes, because trading strategy is important, but discipline is the most important thing that helps a trader to survive in the market. And all the classes are conducted over Google Meet. And if you're unable to attend also, no need to worry, I record each and every session. And the best part is the fees, because it's only $20 or rupees 1500 for 7 days workshop with 1 month support. Okay, in 1 month support, okay, you'll be receiving regular market updates, analysis over WhatsApp, and we also have a Telegram community for interaction with other members. And trading is a journey, it takes time. And if you're looking for personal sessions to clear your doubts and ask questions, you can sign up for semi-annual or lifetime support as well. You'll also receive WhatsApp support from my side. So everything is mentioned here. Feel free to check out. And these are the payment methods. Once you're done with the payment, just share a screenshot to this WhatsApp number. I will add you. The chart of gold again. So again, I'm repeating, if you're a positional trader, then obviously the overall chart of gold should be your priority. Means you should be looking for buy and dip only, because fundamentally gold is always bullish. And if you're a swing trader having a sell right now, you can continue because further downside is possible. But yes, market is mostly waiting for FOMC. So do not expect a complete trend reversal of, let's say, $100 or $200 dip. No. After FOMC, possible, but as of now, no. And you can see that I have drawn many lines on the chart. So these lines are mostly useful for day traders only. So the market opening is going to be important for us. After the market opening, if we see gold going up, then volume will matter. As we all know, Monday markets are not very volatile. Okay, so if market behaves like a normal Monday market, then we can look for a selling opportunity around 2657. Okay, but if market behaves crazy, if you see the market is showing good amount of upside, means medium volume, okay, in that case you can look for a sell around 2665, the purple line here. Why we're considering the purple line? Because of FIBO 0.236, and we can see the 200 moving average is also there. So the support will be working as resistance. So we have two factors why we are considering 2665 to be as a selling opportunity for us. And considering the overall selling pressure, sell at resistance can be a good trading strategy. But if volume is low, in that case, you can look for a sell around 2657 as well. But in comparison, 2665 is a better level, stronger level to go for a sell in comparison to 57. Okay, so these are the two levels where we can look for a sell. Okay, if market goes up after the market opening, and if market goes down, then obviously we can look for a sell. Sell at breakdown means we can look for a sell below 2645 as well. But for any breakout or breakdown in any market, volume plays a very critical role or crucial role. And in this market, okay, volume will always be a dominant factor. So on Monday, if you see market is going below 2645 with, okay, good, I won't say big candle, but medium size candle also, you can look for a sell below 2645 as well. Though we have the next support around 2637 area, but honestly, I am not going to buy around this area. I will be looking for buy around 262924 and 260510. Remember 260510? Yes, 260510 is still there on the chart, present on the chart, and still the best support. So in case market surprises us for the last couple of weeks, Monday market have been really surprising and shocking. So if market starts falling with big red candles, okay, with high selling pressure, continue your sell below 2645, and you can look for the next support around 262924 or 260510. These are the two best supports on the chart of gold, where we can expect a good bounce as a day trader. Okay, and 2637, not very I'm sure right now. Okay, whether it will work or not, I'm a little skeptical because we have FIBO 78.6% retracement level. Okay, if you see the market is coming down with small candles, then you can look for a 40 to 50 pips bounce around 2637. Otherwise, just avoid it if you see market is falling with big red candle. Okay, so again repeating, the market opening is going to be important after the market opening. If we see market going up, okay, with small candles, means low volume, we can look for a sell around 2657. But if the size of the candle is considerable, we can look for a sell around 2665 area. 65 is a better level to sell if market goes up. But no level is permanent. Do not gamble. Do not place buy and sell blindly. Okay, so if you see market is showing price rejection from above, then only hit the sell button. Okay. And on the other hand, after the market opening, if we see market going down, we can look for a sell below this area. Okay, how much we can expect initially? Okay, it's 50 to 60 pips, but if the selling pressure is high, you can hold your sell position as well. Okay, and if you see market is going down with small candles, 37 can provide a 40 to 50 pips bounce around this area. Okay, otherwise two best supports on the chart of gold is around 262924 and 260510. These are the levels where we can look for a bounce. So swing traders, or if you already have a sell, you can continue, but if you're looking for day trades only, stick to the levels. Okay, so that's all from my side, my dear friends. Thank you so much. Bye bye, take care.